Students, welcome to the session. So what we are going to cover today, we have already covered the entire PGBP chapter. So in today's class, it would be more of, you solving the questions based on the concepts we have already learned. Because it's very important for you, you know the concepts, but if you would not be able to apply those concepts, then it would be a difficult thing for you, right? So what we decided is that we would be covering the questions on all the concepts what we have covered till now, and you would be solving those questions, and we'll be discussing how do you even write the answers for the question, because presentation part is also more important than writing the correct answer. If you're just saying that okay, this is allowed, this is disallowed, that's not sufficient. You have to give the correct reasoning. So that is very, very, very important, and that's what we are going to do. Okay, so shall we start? Okay, so I request you that you please take your module also. I have the additional questions other than the module, but some of the questions we are going to even solve from the module also. Okay, so let's start first with the depreciation topic. Okay, so just go to your module, and in that, okay, let me just share the screen with you so that you are also able to see it on the screen. Give me a minute. Okay. Are you able to see this? So in this, you go to the depreciation part. Okay. So the first question, what we are going to solve is under depreciation. Give me a second. Yes. Illustration number 2. A newly qualified chartered accountant, Mr. Dhaval, commenced practice and has acquired the following assets in his office during the financial year 21-22 at the cost shown against each item. Calculate the amount of depreciation that can be claimed from his professional income for AY 22-23, assuming that all the assets were purchased by way of account pay check. Very simple question. I'll give you 5 minutes to solve this question, not beyond that. Very, very simple question. Just quickly tell me the amount of depreciation. This is a very simple question. What is the amount of depreciation? You don't have to see the answers and tell me. Okay. Even if the answers are available, you need to solve because that will give you a practice. And that is very, very important for all your papers. So what is the answer? Okay, tell me, what is the depreciation first you have computed on the first asset which is written over here, which is the computer? What is the amount of depreciation on computer, including computer software, computer UPS, and computer printer? Since this is a very easy question, it shouldn't take so much time. And if you want to, practice more questions in this session, then I would request you to quickly give the answers. Rashmi, on computer, 40%, okay. On plant, 34,500, and on furniture, you have said 30,000. How much is on the computer? 34,500. And furniture, 30,000, okay. Computer, 14,000. Geeta, no. So that's not the correct answer. Okay, let's discuss this question. Let's see it here on the screen. So I've already shown you the answers here. Furniture, first of all, if you see the computer, including computer software, computer UPS, computer printer, these three are given, and all of these are put to use. If you see, the computer, including computer software, is put to use on 1st October, UPS on 8th, and computer printer on 1st October. So for that purpose, first computer, including computer software, put to use for more than 180 days, right? So in that particular case, if you see, it would be 40% entirely. But UPS, whether on that, it will be 40%. So yes, on computer UPS as well, the depreciation rate would be 40% only, right? So on computer UPS, it would be 40%. But since it is put to use for less than 180 days, therefore in that particular case, it will be 20% for half of the year because it is put to use on 8th of October. Are we clear? Then for the third asset, which is computer printer. Computer printer, 12,500. So on that, whether 40% rate would apply? The answer to that is yes. On printer also, the 40% rate will be applicable. And since it is put to use for more than 180 days, therefore, in that case, entire 40% will be there. Then we also have a laptop, which is 43,000. So on laptop, again, it is put to use for less than 180 days. So 20% will be applicable. Are we clear? Then the balance, if you see, is books, of which books being annual publications are of 12,000. And then there is office furniture. So office furniture is 43,000, is 3 lakh. On that 3 lakh, if it is used for more than 180 days, office furniture is used for more than 180 days. So therefore, entire 10%. On books, again, there will be 40% rate. So if you have seen the block, in the block, if you see the books, the annual publications owned by the assessees carrying on a profession, it is at 40%. Are we clear? So therefore, now if you see this answer, we'll go down. So furniture 30,000, plant 34,500, total 64,500 is my depreciation. Are we clear? Yes? Okay. So this question is pretty clear. One more question, we can take it up on depreciation. Again, I expect you to be very quick in answering that. So that is given at the end of your module. Go to question number 2. Question number 2 on page 6.180 of your module. Compute the quantum of depreciation available under section 32 of the Income Tax Act in respect of the following items of plant and machinery purchased by PQR Textile Limited by paying through the account pay check which is engaged in the manufacture of textile fabrics. For the year ended 31st March 22, it is written, so it should be 23 for your year. Assume company does not opt for the provisions of 115BAA or section 115BAB. This is in crores. New machinery installed on 1st May 2021, 84 crores. New windmill purchased and installed on 18th June 2021, 22. Lorries for transporting goods to sale depot purchased and put to use in July 2021, 3 crores. Items purchased after 30th November. Forklift trucks used inside factory, 4 crores. Computer installed in office premises, 1 CR. Computer installed in factory, 2 CR. New imported machinery, 12 CR. The new imported machinery arrived at Chennai port on 30th March 2022 and was installed on 3rd April 2022. All other items were installed during the year ended 31st March 2022. The company was newly started during the year. Also compute the WDV of the various block of assets as on 1st April 22 after charging the depreciation. So 7 minutes time, not beyond. Whenever you are solving the question, time yourself, that will help you during the examination. Yes, Jacob, you are correct. If asset is put to use on or after 3rd October, it implies it has been used for less than 180 days. You do a backward calculation since March, which comes to 3rd October. So before 3rd October, if it is installed, then it is or put to use, it is for more than 180 days. So what are your answers? Shall we solve one by one? New machinery installed on 1st May 2021. What will be the depreciation? Yes, Rashmi, but amount? It is 15%, but what is the amount? No. Yes, Jacob, you are correct. Aren't all of you, yes, Rashmi, correct? Aren't all of you forgetting one additional point over here? What is the additional point? Quickly tell me. Yes, Bomik, very good. It is eligible for additional depreciation as well. So your additional depreciation will also be applicable because it is involved in manufacturing of textile fabrics. Right? It is engaged in manufacturing of textile fabrics and therefore it will be eligible for the additional depreciation. So here on this machinery on 84 crores, there would also be 20% of the additional depreciation, which comes to 16.80 CR. Clear? New windmill purchased and installed on 18th June 2021. What is the depreciation? So here on new windmill purchased and installed, what will be your depreciation rate? %15 plus 20%. Windmill, what will be the rate? Yes, Rashmi, you are correct. It will be 40%. It will be 40%. Yes, you're correct. So 40% amounts to on the windmill, how much? 20. on 22, the 40% comes to 8.80. You're correct. And then there will be also the additional depreciation. Yes, correct. 4.4. Jacob, did you understand? It will be 40%. So you have taken, I think, 15% plus the additional depreciation, right? So it should be 40%. Clear? And plus on this, there will be the additional depreciation. So 40% plus 20%. Clear? Lorries for transporting goods to sale depot purchased and put to use in July 2021. What will be the rate of depreciation? Lorries on lorries for transporting goods to sale depot, 3 CR. %, yes, Rashmi, correct, with no additional depreciation. That's correct. So it should be 15% with no additional depreciation over here. And zero additional depreciation. Clear? Lorries for transporting goods to sales depot. Items purchased after 30th November. Forklift trucks used inside the factory. What is the depreciation? Fast, quickly. Lorries depreciation. What will be the depreciation here? Lorries is 15%. Geeta, lorry is 15% and not 30%. Aniket, yes, you're correct. Rashmi, for the forklift trust, what is the depreciation? It is 15%. You're correct. But here, since it is for less than 180 days, so 7.5%. And then you're saying no additional depreciation. Who says that here there will be additional depreciation as well? Whether additional depreciation will be there or not? Yes or no? Whether we will have the additional depreciation? The answer to that is yes. We will have even the additional depreciation. So additional depreciation will also be there in case of the forklift trucks. Are we clear? So here 7.5% plus the 10%. The balance 10% you can carry it forward to the next year, the additional depreciation. So on forklift trucks, because it is used in the factory. It is used in the factory. Are we clear? So additional depreciation will be allowed. Fine. Then next, computers installed in office premises. Computers installed in our office premises. Whether there would be depreciation and at what rate? Very quickly. Yes, Aniket, because it is used for less than 180 days, so 10%. On computers, what will be the rate? So any computers installed in office premises, what would be the rate? Computer 20%, yes. Correct. Bomik, correct. Aniket, correct. Rashmi, yes. It will be 20% with no additional depreciation. Right? Because it is used in office premises. Computer installed in factory, it will be 20%, but here there will also be the additional depreciation because it is installed in factory. So for the additional depreciation, remember what did we say, that which assets are not eligible? The machinery or plant installed in office premises or residential accommodation, right? But if it is installed in the factory, then in that case, there will be the depreciation which will be available. Clear? Then new imported machinery, but there is a note to it. New imported machinery arrived at Chennai port on 30th March and was installed on 3rd April. All other items were installed during the year. So what about the new imported machinery? Computers, Geeta, it will be 20%, not 40, because it is for half of the year. Put to use for less than 180 days. What about the last part? New imported machinery. Yes, Rashmi, you're correct. This is not installed in the financial year, therefore, no depreciation. Are we clear? So if you look at the answer, plant and machinery 15% block put to use for 180 days. See how it is presented. New machineries installed on 84 crores. Lorries for transporting goods 3 CR, which makes it 87. Lorries are not eligible for additional depreciation. So normal and additional depreciation, right? Plant and machinery 15% block put to use for less than 180 days. So in that case, for the forklift trucks which are used in factory, 4 CR eligible for normal as well as the additional depreciation. Plant and machinery put to use for less than 180 days. In that case, computers installed in office premises, 40%, in factory, 40%, which is less than 180 days, so it is restricted to 20%. And computer installed in factory eligible for additional depreciation. Then plant and machinery, which is windmill, 40% block, put to use for more than 180 days. This is eligible for additional depreciation also. So this is how the total depreciation is. And then WDV, opening WDV is nil. You will add all the machinery's cost and you will less the assets sold during the year, which is nil. Depreciation, normal and additional. This is your WDV. Are we clear? Any doubt? Jacob, the forklift truck you are asking, right? This one. This, as I said, is 7.5% and the forklift truck is used for less than 180 days, right? This is used for less than 180 days. So in this case, 7.5% will be your normal depreciation and 10% will be your additional depreciation, because additional depreciation also for an asset put to use for less than 180 days will be restricted to 50%. Clear? Clear, checker? Shall we proceed further then? Okay. Okay. Next question again on the depreciation only. So you'll have to go back to the depreciation part in your module. I'll tell you the page number. This is again a very small question, but I just wanted you to practice. This is on the proportionate depreciation. Sign Limited, page number 6.38. Sign Limited has a block of assets carrying 15% rate of depreciation whose WDV as on 31st March after reducing depreciation for previous year 2021 was rupees 40 lakhs. So block of assets WDV was 40 lakhs. It purchased second-hand plant and machinery of the same block on 1st November for 14.40 lakh and put to use on the same day. Now, Sai Limited is amalgamated with Shirdi Limited with effect from 1st January 2022. You are required to compute the depreciation allowable to Sai Limited and Shirdi Limited for the previous year ended on 31st March 2022, assuming that the assets were transferred to Shirdi Limited at rupees 60 lakh. Also assume that the plant and machinery were purchased by way of account paying check. Clear? So calculate 5 minutes. So if you remember, what was the rule for proportional depreciation? In case of amalgamation, total depreciation allowable to the predecessor or successor will be apportioned between the predecessor and the successor based on the number of days assets were used by them. So this is what the rule we have studied so far, right? So in case of amalgamation, your total depreciation will be apportioned between the number of days the asset is used by them. Clear? So how will you calculate in this day, in this particular question? Yes, Aniket, they do not. Lawyers do not get it. What is your answer? What is the depreciation? First, tell me what is the total depreciation you are getting. This is very simple question. So be very fast. Be very quick. What is the depreciation? For Sign Limited, Rashmi, you are saying it is 4,95,684. Yes, very good. Aniket, yes, first you'll calculate the depreciation on 40 crores. Sorry, on 40 lakh, 15%. And on 14.4, if it is used for less than 180 days, at the rate of 7.5%. So yes, total depreciation is 6 lakh and 1,08,000, which makes it to 7,08,000. Yes, Jacob, correct. Then allocate on the basis of number of days. So how will you allocate, Aniket? What are the number of days? Rashmi, for Shirdi, you are saying it is 2,12,316. Yes, perfect. Geeta, yes, total depreciation is 7.08 lakh. But what is the depreciation allowable in the hands of Sai and Shirdi? Bomik, yes, everybody has got the right answer. It is 7.08 lakh is the total depreciation. So let's see. Opening WDV is 40 lakhs, right? Addition during the year for less than 180 days, 40 lakhs. Sorry, 14.40 lakh. Now, WDV is 4.40 lakh. On 40 lakh, 15% depreciation. On 14.40 lakh, 7.5% because it is used for less than 180 days. Now, the total depreciation, 7,08,000, you will apportion between this, we are going to apportion between Sai and Shirdi based on the number of days asset used by them, right? So in this case, if you see, when was the amalgamation done? It was on 1st January 2022, right? The amalgamation was done on 1st January 2022. So for the period April, May, June, July, August, September, October, November and December, for 275 days, it was used by Sai Limited, the opening block, right? So opening block, $6 lakhs, which is a depreciation on that, was for 275 days out of 365 days. Right? So 4,52,055 is for the Sai Limited. Then the new asset on which the depreciation is 1.08 lakh, that is purchased in the month of November, on 1st of November. Now, if it is purchased on 1st of November, so only for November and December. For how many days it is used? For the 61 days. So this is used for 61 days. Out of how many days? It is not for 365 days. Remember here, you would not divide by 365. So here, if you see, this is used for only till March. So 151 days. Are we clear? So here, divided by 151. Right? Similarly, in the hands of Shirdi, 6 lakh into 90 days, Jan, Feb, March, divided by 365 and 1.08 lakh into 90 divided by 151. Clear? So this is how the depreciation will be apportioned between the two companies. Clear? Yes, Aniket, correct. Are you clear about this? Yes, Jacob, correct. Correct, perfect answer. Okay, shall we move on to the next question then? The last question on depreciation, which is also we'll very quickly solve. It's just that it has a sale consideration, so I just wanted you to even solve that. Illustration 4. Illustration 4. Lights and Power Limited engaged in the business of generation of power. Furnishes the following particulars pertaining to previous year 21-22. Compute the depreciation allowable under section 32 for AY 22-23 and the opening balance of WDV of the block of assets as on 1/4/22 while computing his income under the head PGBP. The company has opted for the depreciation allowance on the basis of WDV. So company has not gone for the depreciation on SLM. So it has not gone for depreciation under SLM basis. Clear? Assume all the assets were purchased by way of account paid check. Opening WDV 15% block of plant and machinery on 1/4/21, purchase value 8 lakh. WDV for the previous year 2021 less depreciation 5,78,000. Purchase of second hand machinery on 29 December for business purpose 2 lakh. Machinery purchased and installed on 12th July for the purpose of power generation 8 lakh. Acquired and installed for use a new air pollution control equipment on 31st July 2,50,000. New air conditioner purchased and installed in office premises on 8th September 3 lakh. New machinery acquired and installed on 23rd November 3,25,000 for the purpose of generation of power. Sale value of an old machinery X sold during the year, purchase value 4,80,000, WDV 3,46,800, 3,10,000. So compute the depreciation. Okay, one more thing in the last question. If you see, the sale consideration was given in the last question, what we solved. So on this amalgamation question, what we solved, there was a sale consideration which was given. The assets were transferred to Shirdi at 60 lakh. This particular sale consideration, the transfer amount has no relevance for the purpose of computing depreciation. So just a note to you. Okay. Okay. Now quickly solve this question and tell me what will be the depreciation. Now since you have solved so many questions, I expect you to be very, very fast here. What will be the amount? Okay, tell me one by one. First, purchase of second-hand machinery 15% on 29th December for business purpose. What is the depreciation on that? Yes, Geeta, correct. Yes, Aniket, correct. 7.5%. So on second-hand machinery, it will be 7.5% plus no additional depreciation because it's a second-hand machinery. Machinery wire purchased and installed for the purpose of power generation. On this, 8 lakhs. Yes, Bomik, you are correct. No additional depreciation. Yes, Geeta, correct. It should be 15% plus the additional depreciation of 20%. Clear? New air pollution control equipment on 31st July. Yes, Rashmi, very good. It should be 40%. What about the additional depreciation? Yes, Rashmi, correct. 20% additional depreciation. Correct. New air conditioner purchased and installed in office premises on 8th of September. Yes, Geeta, additional 20% on air pollution equipment. Correct. %15% and no additional depreciation. That's correct. Because it is installed in office premises. Clear? New machinery Z, 15% block for the purpose of generation of power. This clearly is writing here. It is written over here. It's 15% plus additional depreciation. Okay, so sorry, here it should be 7.5% because it is used for put to use for less than 180 days plus 10% additional depreciation. Okay. So here, if you see, how would we consider here? First, we will take opening WDV. In all the other questions, there was no opening WDV. Here also, you have the opening WDV. So on this also, there will be depreciation. So opening WDV 5,78,000. Add all the machinery for the 15% block. This is 40% block for the air control equipment. Pollution control equipment for which 2,50,000 is taken separately because it's falling under 40% block. For this, all the machinery cost will be added, less assets sold during the year. So what will be the sale amount you will take? What would you deduct from the block? What will you deduct from the block? Whether we should deduct 3,10,000 or 3,46,000 or 4,80,000. Yes, Geeta, 3,10,000, which is the money payable for the assets sold, which is here 3,10,000, right? So 3,10,000 we would be reducing. This will give us the written down value. Now, only on the asset purchased and put to use for less than 180 days, on that there will be 7.5% depreciation, which is second-hand machinery and machinery Z. So second-hand machinery was purchased on 29 December and machinery Z was purchased on 23rd November. So on this, there will be 7.5% depreciation. Rest on every other machinery, it is 15%. So what we will do is, we will calculate the depreciation on these two, and on the balance WDV, we will calculate 15%. So this calculates the depreciation. Additional depreciation, for that, if you see, for machinery Y, we have the additional depreciation, which was this month for the purpose of power generation. Then we have for this particular new machinery Z. So for that also we have at the rate of additional depreciation at the rate of 10%, right? And then we have for the air pollution control equipment, but that will go to the 40% block. Clear? So total depreciation is this much, and you will reduce it, the depreciation and the additional depreciation from WDV, and you'll get the WDV as on the 1/4/2022. Are we clear? Any doubt? Yes, Mithun, you can. Okay. Shall we proceed further? Depreciation part is clear? Okay. Let's proceed further then. Let me write it here. Question number 4. So here, if you see, you have the questions which I have shared it on the screen. Let's look at the question 4. Net profit of XY Limited engaged in growing and manufacturing tea for financial year 22-23 is rupees 60 lakhs. This is the second year of the operation of the company, which was incorporated on 1st June 21. The following debits and credits were made in the books of account. What are the debits and credits? Depreciation as per books, rupees 10 lakhs. Profit from the sale of green tea leaves plucked in own garden, rupees 30 lakhs. A sum of rupees 25 lakhs was withdrawn from deposit maintained with NABARD. Rupees 15 lakh was used for the salaries and wages paid to employee. 10 lakh remained unutilized during the previous year 22-23. Interest on securities was rupees 1 lakh. Company's contribution to Staff Welfare Trust recognized deposited on 1st May 23 of rupees 1 lakh. Additional information, employee contribution towards the RPF of rupees 1 lakh deducted from their salary but deposited after the due date of fund but before filing of return of income. Company has raised additional share capital as on 1st February 23 from foreign country to meet up its working capital requirement. Exchange gain as on 31st March 23 is 5 lakh, which has not been considered in the P&L account. Share issue expenses are rupees 10 lakh. Company acquired plant and machinery, factory building, furniture at a cost of rupees 40, 25 and 10 lakhs respectively in previous year 2021 to commence its operation. It should be 21-22 year. To commence its operation. Further, the company has obtained the bank loan to acquire the plant and machinery. The loan was waived off by the bank as a part of government policy during the current year. Further, rupees 5 lakh is paid in cash during the previous year 21-22 to the supplier of furniture. It should be 22-23. Amount deposited in the NABARD on 1st July 22 is rupees 6 lakh. Brought forward business loss of AY 21-22 is 1 lakh. Compute the total income for AY 23-24. I'm giving you 10 minutes time. This question is on 33AB. We have done 33AB in the last class, isn't it? So this is on that. What are the answers? Shall we solve together? What is the net profit? Particulars and amount rupees. Right? Net profit is rupees 60 lakhs. Right? Depreciation as per books 10 lakhs. This is very simple. This we will straight away disallow it. Right? So net profit, in that you will do the additions, add expenses disallowed. In that, first depreciation as per books of account. It is 10 lakhs. Clear? Profit from sale of green tea leaves plucked in own garden, rupees 30 lakhs. What is the effect of this? What is the effect of this? What is the effect of this adjustment? No effect. Gita, why? Give me the reasons also, because as I said, giving the right or wrong answer is not important as the reasoning. Jacob, it's an agricultural income. Yes, correct. It should be shown as percentage. No. No, Geeta. So this is an agricultural income. Jacob, you have correctly pointed out. Yes. So profit from sale of green tea leaves is an agricultural income. It should not be shown in percentages because that is for the manufacturing and growing and manufacturing, right? If it is only growing and selling, that is purely agricultural income, and for that there would not be any percentage, so it is entirely exempt under section 10(1). So less profit from sale of green tea leaves as it is agricultural income exempt under section 10(1). What is the amount? 30 lakhs. Clear? Next. Sum of rupees 25 lakh was withdrawn from deposit maintained with NABARD. Rupees 15 lakh was used for the salaries and wages paid to the employee. 10 lakhs remained unutilized during the previous year 22-23. What will be the effect? Mithun, that is, as I said, Rule 7, Rule 8 is for when there is growing and manufacturing. Here it is just growing. Purely cultivation activity is entirely exempt. It's purely agricultural income. So no percentages. 40% not taxable. That is for the growing and manufacturing. Clear, Mithun? Geeta, is it clear? The effect of the sale of green tea leaves. No, Rashmi, go back to 33AB. What did we learn that day? Yes, Jacob. Correct. Okay, let me take quantum of deduction. Yes, Mithun, quantum of deduction is correct, but we have not reached till that. Okay, let me explain you. You are not revising very clearly. So what did we learn for 33AB? You have forgotten. What did we learn? Amount withdrawn from deposit account. If it is withdrawal for the purpose of the business expense, if the amount withdrawn is utilized for the business expense not eligible for deduction. What did we say that day? That since this assessee would have claimed 33AB when it has deposited the amount. Now, if it is withdrawing the amount, it should not be allowed the deduction of the expense again, because that will amount to double deduction. Remember I told you that day? So it's very important to revise. I'm repeating again and again. Revise PGBP every day. So amount withdrawn, utilized for the business expense not eligible for deduction. Any expense, had it been, let's say, purchase of material, had it been, let's say, current repairs, it would not have been eligible for any deduction. Are we clear? Let's say if it would have been for replacement of any plant and machinery or parts of plant, replacement of parts of plant and machinery, which is a current repair, it would still not be allowed as deduction because it's a current repair. So any revenue expenditure will not be allowed as deduction if the amount withdrawn is utilized for that business expense. So here, what we would do is, We'll go back here. Add salary and wages because it's debited to the P&L. Sorry. Salaries and wages debited to P&L since amount withdrawn from deposit account is utilized for business expense, 15 lakhs. Then it says the 10 lakhs remains unutilized. So for that, what did we see that day? Amount withdrawn, but lying unutilized. Deemed income, PGBP. This would be your deemed income under section 33AB. Except in a case where amount is released on death, partition or liquidation. Is it the case of death, partition, liquidation? Answer is no. So amount withdrawn, lying unutilized is deemed income under PGBP. So here, add, here the heading is expense disallowed. Don't put it there. You need to put it separately. Add deemed income. Amount withdrawn from deposit account and is unutilized. 10 lakhs. Clear? Next. Interest on securities, rupees 1 lakh. What is the effect of this? Interest on securities, rupees 1 lakh. Please give fast answers. Deduct, yes, Jacob, but then what is the other effect? Yes, Geeta, correct. Deduct interest on security because it's income from other sources. So, less income chargeable under other head. Interest on securities as chargeable under income from other sources. 1 lakh. Do not forget to give a separate head, IFOS, interest on securities, outer column, 1 lakh. This is what we're next. Company's contribution to staff welfare trust recognized deposited on 1/5/23 of rupees 1 lakh. What is the effect? No, Jacob. Yes, Aniket, correct. So this will be allowed as the deduction because this is company's contribution. This is the employer contribution to the staff welfare trust, which is recognized on 1/5/23. So as per section 36(15)(a), sorry, 15, read with section 43(b), this has to be deposited before the due date of filing return of income, and this has been done. So therefore, this is allowed as deduction, and since it is already debited, no effect. You'll put a note for this. That the employer contribution to the staff welfare fund, if it is deposited before the due date of filing return of income as per section 36(15), read with section 43(b), this will be allowed as the deduction. Are we clear? Additional information. Employee contribution towards the RPF of 1 lakh deducted from their salary but deposited after the due date of fund but before the filing of return of income. What is the effect? No, Geeta, this is employer contribution and not employee contribution. I'm also giving you the answer for the next adjustment. What will be the effect? Yes, correct Aniket, correct Mithun. So this is employee contribution. So how we are going to show it here? Add employee contribution to the recognized provident fund under section considered as income under section considered as income under section 224. This is first considered as the employer's income, 1 lakh, less amount deposited before the due date of fund. This is the recent amendment, right? Under section 36(15)(a). Is it deposited? Answer is no. So 1 lakh will be added to my income. This is how you have to present the employee's contribution. First, you have to consider it in income. Then you will allow the deduction. Even if the amount would have been deposited before the due date of fund, you would have given the same presentation. Then you would have written nil outside. Are we clear? The company has raised additional share capital as on 1st February 23 from foreign country to meet up its working capital requirement. The exchange gain as on 31st March is rupees 5 lakh. Share issue expenses are rupees 10 lakhs. What will be the effect? No, Jacob. Your reasoning is correct, but the answer is incorrect. Jacob, the effect is not given, not because it's employee's contribution, because the employee's contribution to the provident fund has to be deposited before the due date of the fund. So, section 36, if you remember, see, employee contribution to the provident fund allowed if amount deposited before the due date of the fund and not the due date of the return of income. So, how we have written over here? Add income under section 224.10 less deduction under section 36.15. 5A. This is how you need to present it. So, this is included in your income under section 224.10. The employee's contribution is considered as the income of the employer. So, it is considered first as the income, and the deduction is allowed only if the amount is deposited before the due date of the fund. Whereas employer contribution to the provident fund is allowed as a deduction if the amount is deposited even before the due date of ROI, because it is subjected to 43B. Are we clear? Here we have written here, it's subjected to 43B. You remember now? Yes. Now, what is the effect of the second additional information? Share issue expenses capitalized. No, Geeta. Okay. So, the share issue expenses which are there are capital in nature. So, they have to be treated as capital expenditure and they would not be allowed as the deduction. Since this is not considered as a part of P&L because this is given in the additional information. So whatever was debited or credited to the P&L was given here in the first information. The following debits and credits were made. This is given in the additional information, right? So therefore, this will not be given any effect. This will not be given any effect. Are we clear? So, one second. Share issue expenses are capital in nature. Therefore, not allowed as deduction. Since it is not debited to P&L, no effect required. Are we clear? So, share issue expenses are considered as the capital expenditure. Clear? What about the foreign exchange gain? Here you can also write the name of the case law for the share issue expenses. Rupon, India, Supreme Court ruling. It's a very old decision. What about the foreign exchange gain? The foreign exchange gain, what about the effect of that? Mithun, I'm asking you, what is the effect of the foreign exchange gain? You need to give me the answer, Mithun. What is the effect? What do you think? Why, Jacob? Why it should be shown as income? Any reason? Geeta, you are saying income from other sources. Okay. No. The foreign exchange gain which is there, the way share issue expenses which are there, Similarly, the foreign exchange gain is also on account of raising the share capital. Right? So exchange gain is also on account of raising the share capital. Therefore, even this will be considered as the gain in the capital field, and therefore this will be considered as the capital receipt. So therefore, even if it is used for the working capital requirement, it doesn't matter. The application of the funds will not matter. It is the gain arising on the share capital, which is a capital field, and the gain or expense will be capital expense or capital income. Are we clear? So therefore, you can write a note. Foreign exchange gain will be capital receipt as it is in the nature of capital field. The application of funds will not have any impact. This you can write down. There was this old judgment also in the case of Jagatjeet Industry Limited. Clear? So again, there will not be any effect because it is not credited to P&L account. Therefore, no effect since not credited to P&L account. Are we clear? Next. Company acquired the plant and machinery, factory building, furniture at a cost of 40, 25, 10 lakh respectively. In previous year 21-22 to commence its operation, company had obtained the 50% loan to acquire plant and machinery. Loan was waived off by the bank as a part of government policy. 5 lakh is paid in cash during previous year to supplier of furniture. So how will you calculate the depreciation? Depreciation calculation. You have to tell me very quickly. We have machinery, factory building and furniture. We have 3 blocks. Plant and machinery 15%, factory building 10% and furniture 10%. Opening WDV, or let's write actual cost as on 1/4/21. What is the actual cost? 40, 25 and 10 lakh. $40, 25 and 10 lakh. Then what will happen? What is the next adjustment? It has been mentioned that the company has obtained 50% bank loan to acquire the plant and machinery. The loan was waived off by the bank as a part of government policy during the current year. So for the current year, it is saying, and even 5 lakh is paid in cash during the current year to the supplier of furniture, which is like the additional furniture which is purchased. So less depreciation for previous year 21, 22. First, we have to calculate to arrive at the depreciation. What is the depreciation? Quickly tell me. Aniket, what is capital gain? What is the depreciation? Quickly tell me. Give me the amounts. Give me the amounts fast. 6 lakh, 2.5 lakh and 1 lakh. Yes, Aniket, correct. So 6 lakh, 2.5 lakh and 1 lakh. Is this final? Geeta, that is for next year. If you see the furniture which is purchased in cash is in previous year 22-23 and not in the previous year. First, we have to arrive at the WDV for the current year. So that's why we are computing depreciation of earlier year. Clear, Geeta? All of you are forgetting one very important thing, which is going to be tested in exam, right? Which most of the time you forget. You have to be very, very attentive. What is that? Let me see if anybody is able to answer. Just 1 minute I am giving you. Go back to the question. Read everything properly. What is that you are forgetting? Let me see who is able to answer. Yes, Aniket, you will get it. Go back to the question. What is the one thing which you are missing out? Very quickly. Let me see who is able to answer. Yes, very good, Jacob. Very good. Additional depreciation. So here, this entity is engaged in manufacturing. So on plant and machinery, you will be allowed an additional depreciation. Didn't you forget, all of you? You did, right? Additional depreciation. So under section 32(1)(2)(a), this will change your WDV, isn't it? So it will be 20% of 40 lakh, which comes to 8 lakh. This will give us the WDV as on 1/4/22. So this is 26 lakh. This is 22.5 lakh. And this is 9 lakh. Clear? Now comes the adjustments. Waiver of the bank loan. What is the effect? Waiver of bank loan. What is the effect? What did you learn in depreciation chapter? Go back to your notes. What did we learn? Actual cost under section 43(1), less portion of cost. 43(1) main portion only says this: cost met directly or indirectly by any other authority. Waiver of bank loan will be covered over here. Right? Cost met directly or indirectly by any other authority. So waiver of bank loan you have to reduce. Isn't it? So therefore, waiver of the bank loan less bank loan waived, cost met directly or indirectly by any authority has to be excluded. Isn't it? Under section 43(1) from the cost. So what is the cost which is met by 50%? 50% of the plant and machinery cost. So cost of plant and machinery was 40 lakh. 50% of that will be 20 lakh, which will be reduced. Are we clear? Next, the last adjustment, 5 lakh is paid in cash to the supplier of furniture. So if the 5 lakh is paid in cash to the supplier of furniture, that will not be considered to determine the WDV. So repayment of consideration in excess of rupees 10,000 on a single day, otherwise than by way of account pay check, will be ignored while determining the actual cost of WDV. Are we clear? So this 5 lakh which is paid in cash to the supplier of furniture, that will also be reduced. That will also be reduced, right? So if the amount has been added, right? If you go back to your 32 section, cash purchase or repayment in excess of rupees 10,000. Cash payment or the repayment, right? Or your repayment in excess of rupees 10,000. So that will be ignored. That will, be not considered or reduced from the cost. Section 32, isn't it? So that will have to be reduced from the cost. Clear? So 5 lakh, less repayment in cash greater than rupees 10,000. Repayment in cash greater than rupees 10,000. Otherwise then by way of, I've written already in cash. Clear? So 5 lakh. Now you will get your WDV, which is 0.6 lakh. Now you have to calculate, we forgot the depreciation. Now you can calculate your depreciation less depreciation. On 6 lakh, you will calculate the 15%, which comes to 0.9 lakh. On 22.5, again 10%, 2.25 lakh. And on 9 lakh minus 5 lakh, which is on 4 lakh rupees, 0.4 lakh. So your WDV comes to 5.4 lakh, 20.25 lakh, and 3.6 lakh. Clear? Are we clear? So my total depreciation will be allowed, which is allowed here, less depreciation allowed as per Income Tax Act. What is the depreciation which is allowed here? 3.55 lakh. Clear? Are we clear? Now, after you add all of this, let me know what is the deduction under 33AB. The amount deposited is 6 lakh, brought forward business loss is 1 lakh. You have to calculate and tell me what is the deduction under 33AB. No, Mithun, there will not be any deemed income. It will be just reduced. Are you getting 61.45? 61.45? Are all of you getting the same thing? Yeah, so what is 40% of net profit, Aniket and Jacob? I know that is some deposited of 40%, but what is 40%? So 61.45, I'm getting 40% of that, 24.58. So deduction under section 33AB, 6 lakh or 40% of 61.45, which equals to 24.58 lakh, whichever is lower. So it will be 6 lakh. Do we need to consider the brought forward losses first? The answer is no. It has to be. Brought forward losses are not to be considered for calculating the deduction. Are we clear? Brought forward losses are not to be considered. Clear? Brought forward losses are not to be considered. So if you remember, we have done that in specified deductions. So before setting off brought forward losses, PGBP before that you have to consider. So it will be 6 lakh, 61.45 minus 6 lakh, 55.45 lakh. Now out of this 55.45 lakh, will entire 55.45 lakh will be taxable? Answer is no, because some part of it is agricultural income. That's what we have discussed, right? So if you see income, PGBP income minus deduction under 33AB, taxable in case of T would be 40%, exempt would be 60%. So here, what we are supposed to do? Less exempt agricultural income 60%. So 55.45 into 60%, 33.27 will be exempt. So the taxable portion will be 55.45 into 40%, 22.18. Are we clear? Less brought forward business loss. How much is the brought forward business loss here? 1 lakh. So less 1 lakh, your PGBP will be 21.18 lakh plus income from other sources is 1 lakh. So your total income will be 22.18 lakh. Is this question clear? Any doubt? Any doubt? Clear? Shall we take a short break of 10 minutes and then we get back? Okay, let's take a small break of 10 minutes. Okay. Okay. Yeah. Okay. Okay, students. So then, shall we proceed further? Do you have any questions, any doubt? I don't think so, right? Okay. So then I'm moving towards section 35 AD. I'm moving towards 35 AD, which is the specific deduction for the specific businesses, right? It's an investment-based deduction under 35 AD. So that's what we are going to do now. Okay, I'll give you the question. You can write it down. Write down. One second. Question bank. Okay. X Limited on 1st April 22, X Limited commences the operation of on 1st April 22, X Limited commences the operation of infrastructure facility, building the infrastructure facility. Or you can write down infrastructure facility. Commences the operation of the infrastructure facility. Are we clear? Okay. Or you can maybe, let's make it, instead of infrastructure facility, you can write it down. Developing and maintaining new infra facility. The following information is available. Expenses incurred during the previous year 22-23. What are the expenses incurred? Construction cost of the infra facilities. Rupees 80 lakhs. Purchase of plant and machinery. Purchase of plant and machinery 10 lakhs. Or make it 30 lakhs, out of which old plant and machinery or second-hand plant and machinery is 7 lakhs, and second-hand machinery imported from US is 2 lakhs. Purchase of land 20 lakhs. Right? Net profit for the year ended 31st March 23 is rupees 75 lakhs. The depreciation, or we can write it down. Following items are debited or credited to the P&L account. Collection from customers, collection from customers 78 lakhs. Then dividend income, or let's remove this. You can directly write dividend income rupees 1 lakh. Depreciation on the building 3 lakh 40,000, 3.4 lakh. Depreciation on plant and machinery 3.5 lakhs. Donation to political party. Donation to political party 10,000. Repairs and maintenance of rupees 7 lakh, out of which rupees 40,000 are paid in cash. Clear? Expenses incurred. So this is other information. Expenses incurred prior to 1/4/22. Land purchase 50 lakhs. Construction cost 8 lakhs. Salary to staff 78,000. Consultancy fee for designing 10 lakhs. Are we clear? You are required to compute the profits of this particular entity. So please compute it. Jacob, additional depreciation is only available in the first year, not in the second year. You can write here one line as well. These expenses are capitalized on March 31st, 22. What will be the deduction? Fast. No, Vinay Kumar, they are not considered. The expenses given and other information are not considered while calculating the net profit. So whenever other information is given means that is not considered unless it is specifically mentioned. I'm waiting for your answers. What is the deduction under 35 AD? Okay, let me solve this for you. Okay, let's start. So, first of all, how you're going to start this question? That's the first thing, right? And I'm going to make it more complex for you in the next question. So you are required to, present to me all the answers, correct? So first of all, if you remember, I'll take you through section specified deduction under 35AD so that you remember now what we had discussed at that point in time. So what we have discussed is that expenditure prior to the commencement of the business. Expenditure prior to the commencement of the business is also allowed during the previous year in which the assessee commences the operation. Now, this particular assessee has commenced the operation when? On 1st April 22. So, expenditure prior to that will also be allowed, but it should have been capitalized. Expenditure should be capitalized in books of account on the date of commencement of operations, right? So, therefore, here expenditure prior to 1st April 22, or I can write it pre-commencement expenditure. Pre-commencement expenditure to the extent these are capitalized. Pre-commencement expenditure to the extent these are capitalized. Purchase of land. So what we have done that, except goodwill, land and financial instruments. So that is not allowed as the deduction. So land here will not be allowed as the deduction. So land, since not allowed, nil. Construction cost, that will be allowed. So construction cost will be allowed 8 lakh. Salary to staff. Salary to staff is allowed, which is 78,000. Consultancy fees. So capital as well as revenue expenditure, whatever is capitalized will be allowed. Consultancy fees for designing 10 lakh will also be allowed. Clear? So expenditure prior to the commencement of the business will be allowed, right? Let's make it a little complex over here. Let's say, for example, if I have, let's say, one more expenditure, machinery purchased, let's say 5 lakh, out of which rupees 2 lakh is purchased through payment in cash. So I've added one more adjustment over here. Here, if you see, out of 5 lakh machinery purchased, 2 lakh is in cash. So therefore, if you remember here, assets purchased in cash more than rupees 10,000 will not be considered. So here I will take machinery purchased, but only rupees 3 lakh. Cash purchase not allowed. Cash purchase more than rupees 10,000 not allowed. Clear? So this is prior to 1/4/2022. Vinay, what did you learn? Section 28. Prior period expenses are not allowed, right? So how it would claim it in the previous year? It would not be able to claim because it has not even commenced its business. The exception to that is 35 AD, which says that once you commence your business, we will allow you the prior period expense. So that's what here, if you see, what does it say? Expenses prior to the commencement of business allowed during previous year in which the assessee commences the operation. Are we clear? Clear? So this is my prior period expense. Then expenditure during the previous year. What we are calculating here is, we are calculating the deduction under 35 AD. Expense prior to the 1/4/2022, then expense during the previous year 22-23. Are we clear? What are the expenses during the year? Construction cost 80 lakhs. Correct? I'll take it up here, or let me make it simpler for myself. Maybe you will have to write it down because you are writing down in notebook, right? So construction cost 80 lakhs. Purchase of plant and machinery. So 30 lakh is the total plant and machinery, out of which old plant and machinery is 7 lakh. So remember, what did we learn that day? Business not set up with the second-hand machinery. Exception to that is the imported machinery is not considered second-hand, even if it is a second-hand machinery. That is exception, that is allowed. Second-hand machinery, if the total value of the second-hand machinery is less than 20% of the total value of total machinery. So in this case, second-hand imported machinery will be considered for deduction. Old plant and machinery 7 lakh, which is purchased from domestic market. You can write it here, from India. Whether this is lesser than 20% of the 30 lakh, whether this is lesser than 20% of 30 lakh. So the answer to that is no. So on this amount, you will not get any deduction. Right? So 30 lakh, 20% is, 6 lakhs. And here the machinery purchased is of 7 lakh. So in this case, I will not consider this. So here the deduction for the machinery which will be allowed is 30 lakh, out of which 7 lakh we will have to remove. So 23 lakh is what we will allow. Clear? So we'll only consider your 23 lakh because this is total value greater than the total value 20% of the total value of total plant and machinery. If I make this, let's say 6 lakh or let's say 5 lakh, if I let's say make it instead of 7 lakh, if I make it 5 lakh, then we can consider. Then we can consider your entire 30 lakhs. Are we clear? So then I can consider your entire 30 lakhs. Clear? Are we clear? Okay. Then what is the third cost? Purchase of land, which is not allowed. So this we will not consider. Purchase of land. Not allowed. Clear? So construction cost, purchase of machinery, and this will give me total amount deductible under section 35 AD. So total of all of this 23 lakh plus 80 lakhs plus 8 lakh plus 78,000 plus 10 lakhs and plus 3 lakhs. 1 crore 24 lakh 78,000. So 1.2478 crores is the deduction which is allowed under 35 AD. Clear? Now coming to the net profit. Net profit as per P&L account. Net profit as per the P&L account. What is the net profit? It is 75 lakh. What are the adjustments now? Dividend income. Dividend income. We have to consider it separately, right? So less dividend income. Considered in income from other sources. Right? So dividend income is how much? 1 lakh. So you go to income from other sources. Dividend 1 lakh. Clear? Next is depreciation on building, depreciation on plant and machinery. Let's say this is as per income tax only. Let's assume as per income tax act, but still it will not be allowed as deduction because this will not be allowed as deduction. Add depreciation as per income tax act, even if it is income tax or whatever. What is the amount? 3.4 lakh and 3.5 lakh, which totals to 6.9 lakh. This will not be allowed as deduction. Why? Since the amount of asset already allowed as deduction under section 35 AD. So depreciation will not be allowed as deduction because the asset purchase itself has been allowed as the deduction. Are we clear? So if the asset purchase itself has been allowed as the deduction, then again we will not allow the depreciation on the same. Are we clear? Are we clear? Next is repairs and maintenance, out of which of 7 lakh, out of which 40,000 are paid in cash. So only 40,000 will be disallowed. Add repairs and maintenance, cash payment greater than rupees 10,000. So 40,000 will be disallowed. Clear? Are we clear? Any more adjustments? No? Any doubt till now? Construction fees, Vinay Kumar, it was getting constructed, but unless and until full construction is complete, how will it get finished? Right? Right? So therefore, in that case, there will not be any commencement before that. Clear? Any other question? Thanks, Ram. Okay. Now, whether 35 AD will be allowed as deduction over here, whether 35 AD, so my net profit is coming to, or PGBP before deduction is coming to 75 minus 1 plus 6.9 lakh plus 40,000. Right? So 75 lakh plus 6 lakh 90,000 minus 1 lakh plus 40,000. 81 lakh 30,000. Whether 35 AD will be allowed. So what did I tell you? 35 AD says there are conditions that the business should not be formed by splitting up or reconstruction of the existing business. Business not set up with the second-hand machinery. Exception was that the second-hand machinery should be lesser than 20% of total machinery. So here, my second-hand machinery is in fact greater than 20% of total machinery. So will I be allowed this amount? Though I'm not considering here the second-hand plant and machinery, but still I have not fulfilled the condition itself. So I will not be eligible for deduction. So here, if my second-hand, if the business is formed with second-hand machinery, then section 35 AD deduction not allowed. Here, the exception of second-hand machinery lesser than 20% of total value of total machinery is not fulfilled. Are we clear? So this just I wanted to show you that if the condition is not satisfied, the deduction will not be allowed. Now let's say if my value of machinery was 5 lakh, let's assume and redo the question as if the value of machinery was 5 lakh. Then in that case, here I would have considered entire 30 lakhs. I would have considered entire 30 lakh because it is lesser than 20%, right? Then in that case, my deduction would have been 1.2478 CR plus 0.7. Right? Plus 7 lakhs. 1,31,78,000. So this amount would have been 1.3178 crores, right? Now, whether the deduction will be allowed? Yes, the deduction would have been allowed, but here there would have been section 35 AD deduction 1.3178. There would have been loss from specified business. Loss from specified business. What would have been the loss? 50,48,000. 50.48 lakh. Are we clear? Yes, sorry, I forgot. Donation to the political party is disallowed. Donation to political party, I have not considered here, which is disallowed. So here you also need to add donation to political party 10,000. Donation to the political party 10,000. You have to consider that. But that will be allowed as deduction, less deduction under chapter 6A under section 80 GGB. Donation to political party 10,000. It will be disallowed from the business expense. So this will change. This will become 81,40,000, right? And this will become 50,38,000. 50.38 lakh. Clear? This is loss. And then we have income from other source and 10,000. So 90,000 would have been my total income. This loss I can carry forward for indefinite period, but the only condition is that the loss should be claimed in the return filed before due date of return of income. Loss should be claimed before the due date of return of income. Are we clear? Okay. Did you understand? Let's say if I had, let's assume in the question, if I have business income from, let's say, trading 10 lakhs. Let's say if I had business income from trading 10 lakh, will this loss be allowed to be set off against the business income from trading? Whether this loss will be allowed against the trading income? What do you think? Whether the loss would be allowed against the trading income? Yes or no? No. So specified business loss is not allowed against the other business income. Clear? Specified business loss not allowed against the other business income. Clear? Any doubt? Okay. Any questions? Any doubt? Yes, Vomik, you're correct. Now, last one question, what I'm going to take with you. We have covered the PGBP comprehensively. This is more of the adjustment-based questions, and it's a very comprehensive, most likely to be appearing as question number 1 of your paper. So, ABC Limited credited to its P&L account drawn for the financial year ending 31st March 23 the following amounts. What are the amounts? Interest waived off for the years 2014 to 2017, 2,80,000. Interest waived off for the year. What will be the adjustment? You need to only just tell me the adjustment. We are not solving the sum comprehensively, but you need to only tell me the adjustment. What will be the effect of this? Interest waived off. Very quickly. Reduce? No. Why it will be reduced? So this interest waived off, I would have claimed this interest expenditure in the earlier years. Now if it is waived off, then this will be considered as my income under section 41(1). Remember? What did we learn last time? 41(1). Remission or cessation of trading liability. If any deduction has been made in respect of loss or expense or trading liability, and subsequently if benefit is obtained by cessation or remission of trading liability, the value of the benefit is deemed as income of the previous year in which write-off is made or waiver is made. And here you can write it down, even if unilaterally amount is waived, it will be considered as income. So it is not necessary the other party should have written it off. Even if it's a unilaterally written off in my books of accounts, that would be considered as the waiver. Are we clear? So explanation to section 41 clearly specifies this, that in case it's a unilateral act, so the loss or expenditure or the benefit in respect of trading liability by way of remission or cessation will include the remission or cessation by a unilateral act of that particular person by way of writing out the liability in the books of accounts. Right? So therefore, this will be considered as income under 41(1). Unclaimed dividend for the year 2019, rupees 2,10,000. Unclaimed dividend. Why Vinay no treatment? No, not in income from other sources. How it will come in income from other sources? No. So unclaimed dividend, I would have paid the dividend which is unclaimed appearing in my books of accounts, and now it is credited to the P&L account, right? Because it's not being claimed. But here, whether this will be considered as income under 41(1), the answer to that is no. Because this is never allowed as deduction. The dividend is not allowed as deduction. Therefore, not income under section 41(1), since dividend not allowed as deduction. For applicability of 41(1), the expenditure should have been allowed as deduction. Excess provision for doubtful debts written off. Earlier, the doubtful debts were created, provision was created, and now it is written off. What will be the effect? It is not unclaimed dividend received. It is unclaimed dividend credited back to P&L. It's not received, Vinay. Provision for doubtful debt written off. What will be the effect? Be very quick. Yes, correct, Vinay. So no treatment as expense would not have been allowed on provision. So same as provision for doubtful debts not allowed as deduction. Industrial power tariff concession received from the state government. What will be the impact? Industrial power tariff concession of rupees 5.4 lakh received and credited to the P&L account. What will be the impact? Why added back, Jacob? Why less, Vinay? Yes, Aniket, perfect. No treatment because the concession received from the state government is considered as your income under section 224. So therefore, if you have received any concession, from the state government, that is considered as your income under 224. And also, if you remember, under 28(4), any benefit or perquisite, right? So there also, if you see that this is considered as the, but this is not in kind, so it will not fall under 28(4), but this is considered as income under 224. Are we clear? So this is considered as the income under section 224. So therefore, it will not be reduced and no treatment requires to be given over here. Clear? So industrial power tariff concession, no treatment as considered as income under section 224. Are we clear? Clear? Any doubt? Next is profit of 8 lakh on sale of plot to AVM, a domestic company in which the entire shares of which are held by assessee. The plot was acquired by ABC on 30th June 2019. So what will be the effect of this? Profit on sale of plot. Profit on sale of plot, what will be the effect? Vinay, it is a business income because it is a trading receipt, right? So what is this particularly power tariff concession which is received from the government is in respect of the assessee business because he could carry on the trade or business more profitably. So this is a revenue receipt. Are we clear? This is a revenue receipt. So this is in fact a trading receipt. This is a power tariff concession which has been given to them, which is in a way in a kind also. So you can put it under 228, 28.4 also, or even it can be classified under 28.1 as well. Clear, Vinay? It could be treated as capital gain, right? Why it would not be treated as capital gain? So, Jacob, you are saying it would not be treated as capital gain because constitution is in the form of shares. Aniket, yes. CG. So, what is the answer here? Profit on sale of land is short-term capital gain as it is held for less than 24 months, but it will not be a taxable capital gain. So that's what we are going to learn in the capital gain chapter. So this will be short-term capital gain, however, not taxable as sold to wholly owned subsidiary. So there is exemption under section 47(4), wherein if it is transferred to a wholly owned subsidiary, which is an Indian company, it would not constitute a transfer under section 47(4). Clear? But this will be reduced from the profit and loss account. The company had made a sale of rupees 20 lakh to Messrs. A Co-Engineers as sole proprietary concern on 10th October 2019. Rupees 10 lakh was written off in the books as bad debts. Due to demise of the sole proprietor, the company could only collect 7 lakhs towards the final settlement on 1st March 21. The amount recovered was shown as bad debts recovered and credited to statement of P&L account. What will be the effect? Bad debts recovered. So 7 lakh is credited to the P&L account. 7 lakh is credited to the P&L account. So you will reduce, first of all, 7 lakhs. Why we would reduce it? So out of 10 lakhs, if you see, so 20 lakh was the sale made, right? 20 lakh was the total debt, out of which 10 was allowed as the bad debt deduction. Amount recovered is only 7 lakh. Amount recovered is 7 lakh. So amount recovered is less than the deduction allowed. The deduction allowed, right? So therefore, the income will not be taxable. 7 lakh will not be taxable. So if you remember, section 36, bad debts disallowed, which is 10 lakh, is greater than the amount recovered, which is 7 lakh, right? So debt due minus debt allowed minus amount recovered will be considered as deduction under section 36(2). So instead of considering 7 lakh as the income, we need to allow the more amount as the deduction. So what will be the deduction allowed now? What will be the deduction allowed? So here, the deduction under section 36(2), since bad debt disallowed is greater than your amount recovered, right? So it's greater than your amount recovered. So debt due minus debt allowed is greater than the amount recovered. So therefore, in that case, I will be allowed 3 lakh as the deduction. I will be allowed the 3 lakh as the deduction, correct? So company has written off 10 lakh, out of which only 7 lakh could be collected towards the final settlement. Therefore, the balance 3 lakh will be allowed as deduction, provided it is written off in the books. Clear? So you can do it like this also. Debt due is 20 lakh, minus 10 lakh is allowed as deduction, minus 7 lakh is recovered. So 3 lakh will be allowed as further deduction. So deduction under section 36(2) will be 3 lakh. Clear? Depreciation charge, you will add it back. Amount of rupees 10 lakhs were spent on salary and material purchase for scientific research and development. This will be allowed as deduction. So no further effect because 100% is allowed. Bonus paid to staff includes an amount of rupees 1.5 lakh which was provided but has been paid in August 22. So bonus paid to the staff, whether it will be allowed as deduction? Whether it will be allowed? It will be allowed because this is before the due date of ROI under section 139(1). So no effect for this also, it will be allowed. Interest of rupees 15 lakh paid on loans taken specifically for purchase of plant and machinery. Out of this, 5 lakhs is for period up to the period till such machinery was commissioned. So 5 lakh will be capitalized. This portion will be capitalized as per explanation to section 43(1) and proviso to 36(1)(3). And only 10 lakh will be allowed as deduction. So 5 lakh will be disallowed. 2 lakhs paid to the consultant for expert opinion on new business setup. 2 lakh paid to the consultant. This is a capital expenditure because this is for the new business. So not allowed as deduction. Clear? A debtor who owed the company an amount of 20 lakh was declared insolvent and hence was written off by debiting the statement of P&L. So bad debts written off is allowed. So therefore, again, no adjustment. This is allowed. The company has paid the 5 lakh as regularization fee to the municipal corporation to regularize the deviation from the sanctioned plan in construction of the factory building. This is not allowed as deduction because this is for compounding the offense, and under section 37 you will not be allowed this particular deduction. You will not be allowed this particular deduction. Are we clear? So therefore, any fee which is paid for regularization of the loan, which is not allowed as deduction. So this is not allowed. Not allowed under section 37. Donation includes 10 lakh given to political parties. Not allowed. This is allowed under section 80 GGP. The company has incurred the expenditure of 25 lakh towards purchase of coal for its smelting furnace, for which the invoice is not available. However, indirect evidence such as good invoice report, online payment are available. The auditors have made an adverse remark in the report in this regard. So if the company has purchased but it has provided the goods receipt and it has also provided the other details, it will be allowed as the deduction. It will be allowed as the deduction. Are we clear? So even if the company has made the online payment, even the payments made online are not to be treated as genuine automatically, but the HC has produced the goods invoice report based on which the genuineness is established. And therefore, this will be allowed as deduction because this is produced. So, genuine transaction and not a bogus payment. Clear? Employer's contribution to PF together with similar amount of employees' contribution was remitted on 28th May. Due date was 15th April. So employee contribution will not be allowed. And this will be considered as income, but employer contribution will be allowed. Are we clear? The assessee had acquired machinery from US for 2,50,000 on September 9 by borrowing from Citibank US. Rate of exchange on the date of acquisition was 80. Exchange rate on the date of payment was 82. It had incurred 2 lakh in buying materials and spares towards trial run expenses, and the product generated during trial run was sold for 55,000. Custom duty was 20%. So in this case, how will you calculate the actual cost? You will calculate on 2,50,000. You will calculate on at rupees 80, whatever the amount will come. You will add the forex loss under section 43A. If you remember, on the payment basis, it is allowed when the payment is being made. So for the 2 rupees on 2.5 lakh, it will be allowed. So if you remember, under 43A, so if you remember section 43A, where is 43? Yes. Add or less foreign exchange gain or loss capitalized when the loan has been repaid in full or in part. So if you see here, if you see over here, the assessee has acquired the machinery by borrowing from Citibank and it has paid the loan, and on the date of payment the exchange rate is 82. So what does it say? That gain or loss in loan in foreign currency will be capitalized when the loan has been repaid in full or in part. Clear? So therefore, that will be taken into consideration, exchange gain or loss. Then the trial run expense will be included. Add trial run expense. Add customs and less trial run income. Clear? Debenture of face value of 1500 lakhs having 5 years tenure were issued at discount and were subscribed in full. So discount on the debentures were issued at the discount. So discount on the issue of the debentures will be allowed over the tenure of the debentures, that is 1/5 every year. So 1/5 over tenure of debentures. Company received a bill of rupees 3 lakh on 31st March 23 from a supplier of cotton for supply made in March 23. The bill was omitted. Payment against the bill was made. Necessary entry was made. The same has been considered in closing inventory valuation during physical verification. So you need to consider this as well. Less 3 lakh as purchase because this is missed out. Clear? The company has made purchased 1,000 bales of cotton at 5,000 per bale from ENP LLP, a firm in which majority of the directors are partners. The normal selling price is 4,600. So 400 per bale disallowed under section 40A2. Are we clear? Clear? So you can go through this question in detail and also solve the additional questions from the module so that you are able to practice PGBP effectively. With this, I have finished the PGBP entirely. Last point, confusion. As I said, Aniket, it is excess expenditure to the related party is disallowed under section 48(2). Excess expenditure over the fair market value is disallowed under section 48(2). Right? We have done 48(2) already. Clear, Aniket? So you will also calculate depreciation over here. Clear? Based on the actual cost. So purchase or expenditure which is from a related party at a price higher than the fair market value, the difference between the price and the fair market value will be disallowed. Clear, Aniket? Thank you, Aniket, so much. Jacob, no, I have almost covered all the problems here and I'll share this particular sheet as well so that you can, go through it in depth. Okay. Thank you, Vinay. Thank you so much. See you in the next class, which is on Monday.